Hello and welcome. Today we share a list of 3 stocks connected to the AI build-out that many retail investors are totally missing right now. And these names have incredible growth stories and have a lot of potential for some pretty good returns for investors. So the first stock we're going to talk about is called Argonne. The symbol is AGX, and Argonne helps in the construction of power plants, and the overall data center build-out is very concentrated in the power plant space because of the bottleneck, the need to cool, and to provide electricity to run the computers. So Argonne's a stock that's had a big run up, but it's pulled back recently by about 15%, and that's the perfect time, in our view, to buy the stock. It's a long-term play on the data center build-out, and we think that's where the biggest opportunities are going to be. It is estimated that the data center build-out's going to go on for another 3 to 5 years and beyond. So people who are providing the engineering and construction management services for the build-out are on a growth path that is going to continue. And the fact that the retail investor hasn't discovered stocks like this suggests that there's another wave of buying potentially to come. Experts believe that the data center build-out is the real growth story in the U.S. stock market, and many institutional investors agree with that point of view. The second stock we're going to talk about is Nasdaq, whose symbol is MTZ. It provides a similar level of services that Argonne does. This isn't about having something proprietary. This is about having experience and having done these projects over and over again. So that we're not just talking about electricity, we're talking about the actual physical build-out of these data centers. And you need companies that have been involved with massive projects to keep things on track and on budget. So they're critical in the chain, but it's their experience, not proprietary tools, that matters, and people are going to the experienced providers. For context, a company like Nasdaq generates about $15 billion in revenue. So these are serious companies. They beat by 40 cents. The estimate was 99 cents for the quarter. It was reported on April 30th. They actually came in at $139, and they talked about raising estimates for the balance of the year. Analysts upgrade feeds on earnings surprises. So those are the factors in the power gauge, and Nasdaq has a history of beating analyst estimates over the last 6 quarters, and that translates into analysts raising their estimates. So that gets a very bullish rank in our power gauge, and it also translates into a rating trend, meaning that analysts are upgrading not just their estimates, but their ratings. So this means going from equal weight to overweight, from hold to buy, and so forth. And that's the pattern we like to see. And you're seeing it in all 3 of the stocks that we're talking about today. Nasdaq has a very bullish earnings estimate trend, a very bullish pattern of positive earnings surprises, and a very bullish trend of analysts raising their U ratings on the stock. When you combine it with being in an industry like construction and engineering, which, believe it or not, is a hot growth industry, it's a prescription for making money in the stock market. The point being, you don't want to chase stocks making new highs or spiking up on news. You want to wait and buy it at your comfort level when you have a sense that the dip buyers are going to come in, and you want to be one of those dip buyers here. Well, the last name in the list is called Quant Services, and the symbol is PWR. And the symbol points you to what the company does. They are the infrastructure solutions provider for the electric and gas utility power generation industry. So the first 2 stocks we talked about are actually involved in the construction management and build-out of the data centers themselves. Quant helps the electrical power companies expand their capacity so that data centers can overcome these bottlenecks. And it's also the largest of the 3 stocks. It has revenue of about $30 billion and a market cap of $100 billion. As with the other 2, there was a pattern of positive earnings surprises, with analysts raising their estimates and upgrading their ratings on the stock. And here, we've had a shallower pullback, a pullback of about 8% in the stock. It spiked up again in early May after their earnings report. They beat estimates by 35% on the same day, April 30th, that Nasdaq reported. Estimates were 203 for the quarter. They actually reported 268, and the stock spiked up from 630 to 760. So these pullbacks are buying opportunities, in my view, in stocks that not many retail investors are focused on. Obviously, the institutional holdings are very big, but retail investors not so dialed in. This company, over the last 5 years, has reported positive earnings surprises in 18 of the last 20 quarters. When a company reports a positive earnings surprise, it catches some people off guard, or they see the report or their brokerage firm highlights it and they jump in. You don't want to be the one jumping in. You want to be in before the earnings report comes out so you can get the benefit of the spike instead of being the guy who creates it. Electrical grid infrastructure in the U.S. is ancient. It's vulnerable to natural disasters. It's vulnerable to cyber shenanigans. That's why it's necessary to upgrade the electric grid. And Quant Services is going to be doing this work forever. They're going to have business from here until time immemorial because the grid must be upgraded, not just for AI, but for growth in the US. Thanks for watching. Please subscribe for more.